Hi, and welcome to day one of our mini course Accounting Made Simple. I'm Agnieszka, and today we're going to explore one of the most crucial financial statements for your business, the income statement. The income statement, also called the profit and loss statement, shows your business's performance over a specific period. It's your go to document to see whether your business is making profit or loss. Now let's discuss how the income statement looks like. The income statement is made up of several key sections that help you track how your business is doing financially. Let's break it down. Revenue. This is the total money your business earns from selling products or services. Costs of goods sold. These are your direct costs of producing the goods or services you sell, including things like materials or direct labor costs. Then, subtracting cost of goods sold from revenue gives us the gross profit. Gross profit tells you how effectively your business is producing its products or services. Next, we have the administrative expenses. These are your general business expenses, things like rent, utilities, wages, and office supplies. They are costs that keep your business running day to day but aren't directly tied to the production of goods or services. After we deduct the administrative costs from gross profit, we arrive at operating profit. Then we have our net profit or loss, also known as the profit after taxation, and this is basically our profit after deducting all the expenses and taxation. So this number shows whether your business is actually making money after covering all costs and tax. In summary, the income statement tells you how much money you earned, what were your total costs, and whether you have any profit left after paying all your expenses. All right, let's now consider why the income statement is important. The income statement is a powerful tool for business owners, and here's why. It shows whether your business is financially healthy. Basically, you can check whether you're making more money than you're spending. Also, by understanding where your expenses are coming from, you can make smarter decisions about whether to cut costs or invest more. And lastly, by comparing income statements over different periods, you can see if your business is growing or if there are any problems that need your attention. Investors and lenders also rely heavily on the income statement to evaluate your business's performance and determine whether they should invest in or lend money to your business. So, how do we read the income statement? Let's take a real life example to see how useful the income statement can be in decision making. Imagine you run your own retail clothing store and you just reviewed your income statement for the last year, and here's what it shows. At first glance, you're making a profit of 13,000, which seems good, but when you dig deeper, you notice that your marketing expenses have increased 30% from the previous year. What can you do with this information? You could investigate. You can check whether the marketing costs are rising or whether this increase is due to a new campaign or whether there are any inefficiencies that need to be addressed. Evaluating whether the increase in marketing expenses is delivering a proportional increase in revenue is essential. If your revenue has remained the same, you may want to reassess the effectiveness of your marketing efforts. You may consider relocation of some of the marketing budget to other areas, such as expanding your new product lines or improving customer service. This deeper analysis of your income statement allows you to spot issues and opportunities before they become bigger problems and helps you to make strategic decisions to keep your business on track. Now that we understand the basics of income statement, take a moment to review your own income statement. Can you identify your revenue, gross profit, and net profit? Understanding these key figures will help you to make smarter financial decisions. In tomorrow's lesson, we will discuss the difference between the profit and cash flow. See you there.